Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are talking metals, gold, kind of a mixed day for gold. Non-farm payroll, the setup for gold, we were hovering right around key level at 1275. And shortly after, we saw a big flush out in the market down to make new lows, recent lows anyway, down to 1262, which was immediately rebounded back towards the session high. So it was kind of one of those days where I think a lot of longs that were waiting for some kind of signal to get out did, and then the market reversed right back. So right now on a settlement basis, you're probably still holding on to those longs, but if you're looking at this as a technical sale based on the fact that we blew through 1275, 1270 pretty quickly, I think that that's probably gonna kick or kind of leave a mark for on some people here. As right now we're still hovering in that key technical area, and 1275 has been that ever since we went from 1275 to 1362 back to 1275 since September 8th. What did that do to the dollar? Well, what did the dollar do to gold? The dollar actually caught a nice bid, the highest bid we've seen in the DXY since going back to July. And I think that the dollar strength comes on the heels of not the non-farm payroll headline number, however, but the average hourly earnings component was very strong, and a lot of the buzz and around the number this morning around the headline was more going to be hurricane related, so it was going to be pushed off obviously until next month. We'll see if we get that. If we see negative numbers in October, there's going to be a problem, but 1 month does not make a trend. So right now, the market, the dollar remaining strong despite the fact that we saw a negative headline, but strong average hourly earnings. And what does that mean gold's going to be looking at ahead? Well, we have a big week ahead. We've got the September FOMC minutes. A lot can be taken from those. You know, how quickly will the Fed be looking to resume hiking in 2018? Obviously, the market's almost fully priced for a rate hike in December, but after that, it gets a little murky. So I think gold right now kind of waiting to see how aggressive the Fed might be. Likewise, we may get a Fed chair nominee announcement. That will be something that we're expecting over the next 2 weeks, so we can't really pinpoint exactly when it's going to be. And lastly, I think the tensions that we're seeing with North Korea continue to kind of pop up, and that's going to keep gold bid. So a tug of war here between Fed news and geopolitical news kind of pulling gold back and forth. But right now, it's still hovering at that 1275 level. We're waiting for the catalyst that's going to either push us back towards 1300 or send us sailing to the downside again. And I think right now, gold is certainly waiting for that catalyst, and we're not going to get it today and this afternoon on a Friday. Markets are going to have mixed opens on Columbus Day, but I think coming back in on Tuesday, we will be looking forward to the Fed minutes on Wednesday. This is Todd Colvin coming to you from the floor of the CME Group.